everything that has happened in the you must have heard about data tracking, privacy, you know Google taking back some of their products, Facebook launching some of the other variants what they could. Third party targeting, tracking, marketing is going to suffer setbacks more and more. Each country is coming up with its own data policy regulations. They'll make it more and more complex. Of course, Google and Facebook will find ways to survive and they'll do more, but that creates opportunities for companies like us. Everything about your users is with you. You don't have to necessarily go back to an ad exchange to get your user back. You forgot the fact that they were your users in the very first place.
Yeah.
Right? If somebody is best placed to get them back is you. It's not Google or Facebook. Right? So first party CRM marketing will become more commonplace.
Hi everyone, I'm your host Siddharth Aluwalia. Before we dive deep into this week's conversation, I would like to thank our sponsors, Prime Venture Partners. Prime is a high conviction, high support investor backing star teams with differentiated ideas. All partners at Prime work actively with the entrepreneurs post investment to accelerate building a great company. Prime focuses on building differentiating companies whose solutions are 10x better and are powered by technology and product. Prime is now investing from its fourth fund of $100 million dollars and is often the first institutional investor in category creating tech startups such as MyGate, HackerEarth, Mfine, and Wheelseye. To know more about Prime, visit primevp.in. Today, I have with me a dear friend, Avlesh Singh, co founder and CEO of WebEngage. WebEngage is a full stack marketing automation suite that drives growth for consumer businesses by enabling them to engage users via multiple channels like push, in app, SMS, on site notifications, web push, email, Facebook, Instagram, and WhatsApp. WebEngage has carved a niche for itself in user retention, in helping large brands build their user retention strategy. Welcome, Avlesh, to 100x Entrepreneur Podcast.
Really privileged to be here. Thank you, Sid. Thanks for having me. And I'm hoping that this will be useful for other budding entrepreneurs, and there'll be insights and lessons learned from our journey that will be of value to them. Thank you. Thank you for having me.
Looking forward for our conversation, Avnish. Avnish, in one of your Twitter posts, while celebrating the 10th year anniversary of WebEngage, you said, after two park pivots, five near-death situations, and three buyout offers later, WebEngage
Right.
is a decade young today. Would love to know about these key events that made WebEngage and the resilient company it is today.
That's a long trip down the memory lane. In interest of time and to keep it short. Um, so, for those who are unaware, WebEngage started um, with a being a very simple web engagement tool. That's where the name also comes from. And the idea was to provide a tool to marketing teams who could use it to very simply throw pop-ups on their website. And these pop-ups could be in the form of interventions, nudges, blockers, all kinds of different UI formats, and the message in those pop-ups could be customized to the user seeing it. The use cases they varied from segment to segment. For example, a lot of e-commerce companies back in the day were using that product um, to gauge intent for a user who wanted to make a transaction, but was not going ahead with it. You call it sitting on the fence user. And if you have spent enough time, ample time on my, let's say, website, e-commerce website, adding a product to the cart, but still not finishing the transaction, a pop-up shows up depending on the product that you've added, the value, etc. Let's say there is a discount code there for you to complete the transaction if you did it within, let's say, 60 seconds. Those were the use cases that this product was being used for, the first version of WebEngage. And we had a pretty good run with it. We also raised some capital from the likes of GTI, Bloom, etc., including Rajan. He was an angel investor back in the day. he's now at Sequoia, right? So a couple of other angels along with him. We did raise some capital, decent growth. At our peak, I think we got to like about $2.5 million of ARR. Nothing substantial, but it was a very long tail DIY product, and it was supposed to work in a very DIY fashion, like all SaaS products, SMB SaaS products. So the discovery is online, the fulfillment is online, the integration was just like a JavaScript pixel that you could drop and make work. We did this for about 4 years, Sid, and as I said, right, good run. Almost half the customers were in India, other half were in the US. Nobody knew we were an Indian company because the product was just like that, right? Very low touch. We had absolutely zero sales or support or any of those things at that time. And Ankit, who is my other founder, right? Ankit and I, we started deliberating, where do we go from here, right? What do we, how large could this be? And we were trying to figure out the answer, which would have been incomplete if we couldn't have found, if we were not able to find ways to go deep into the same customer. And back in the day, we had Flipkarts and Snapdeals and Mintras and Zabongs. All of these were customers on that product, and our ACVs at that time used to be around $3,500, right? Now, if you don't make money off Flipkart as a software service provider, then who else will you make money from, right?
Yeah.
That's where this started, and one thing led to another. We stumbled upon this notion that marketing will only put a certain amount of value. They'll ascribe a certain amount of value to the software only if we are able to convert or bring more users back to the website, back to the app, as compared to just being in the business of converting those on the app. And that was, you know, that while that insight, it didn't happen overnight. There was a significant bit of customer development through almost like a course of 1 year period. A lot of unlearning, right, from where we were on the stack, and we started taking small baby steps in that direction. One thing led to another. We built the whole stack as you see it is today. Took us like about a year, year and a half to actually just build and put it out. The very first version. So in fact, we launched in July of 16. The product stack that you see today. Almost all commercial success of the company that you see today is attributed to that product pivot and launch. Um, Looking back, none of it was easy. In fact, that a year and a half period of pivoting from the previous stack to the current stack, or all of that was very difficult. We were losing customers on the previous stack. The new stack was still sort of building. We couldn't find ways to sell it because the product was not ready, right? So we were going through our own sort of learning phases of what this new stack is going to look like. So that in all of this, please try and understand, right? In the journey of a company, we were built, the first 4 or 5 years of a journey were all about building a SMB SaaS product and finding ways to get customers online and getting them to buy the product online, try it out, pay online. Everything was just very self-serve, right? Very DIY. The product stack that we now have is, from from categorization standpoint, we cater to mid-market and enterprises. So we are no more a SMB SaaS, right? Our ACVs, they fall in the range of, I'm sharing some of these numbers, uh, for audience to benefit from and contextualize some of the learnings that will come in course of this conversation. We operate at an ACV of about $35,000 right now. Right? Now, that's a very significant change from a $3,000 product. The way you find customers for that and the way you build and service that product versus how you do this are very, very different. While in hindsight, all this is great knowledge to have, but when you're going through an organizational change as a part of the pivot, it's a very difficult one. You have to build teams to do things that you haven't done before. Your teams which have done things before, you have to coach and learn and make them unlearn what they've learned before and impart new learnings which they could put to use, right? Because this is an entirely different world.
Yeah.
And it's not that we knew all of it, right? 5 years ago, we have had our own share of learnings in the last 5 years. I'm sure in years to come, we'll have many more. A pivot is generally perceived as a product pivot. My my own learnings in that has been product pivots are very easy. It's like, we are all software builders, right?
Yeah.
That's all we've done for a living for all our life. You build software one, software two, doesn't matter. You can build any software that you want. But pivots, the reason why they're hard is because it's not just pivoting the product, it's everything around it that's a lot more harder. A lot of times when pivots don't work, it's because of these reasons and not the product themselves. Yeah, it's your organization has to pivot, your people have to pivot, and they have to pivot faster than the actual pivot for you to be market ready, right? Those things are very very hard, right? And this journey, it was marred with us not being the most lucrative asset in private markets. So, naturally, nobody wanted to invest in a company like this because all of it looked so cumbersome. It was all over the place, and nothing was practically working for the company. You had a good product going, and then you decide to pivot. You do something else, which has no proof that it's working, and clearly so because we were figuring our own story out. From July 16, from the moment we launched the product for about 4 years, very painful journey. And I think a lot of our courage, wisdom, resilience, it's attributed to that phase. Nothing in our life during that period was easy. It was very, very difficult. And all those near death situations, buyout offers, I know I won't go into the details of those, but everything that I spoke about, was it, it almost invariably happened in that phase. We had a good change of fortunes last year. We raised some capital. Some of our latest investors, including Indian Ocean, Diane Fund, NB from Dubai, these guys, they decided to back us last year, and been a good ride. We've raised some foreign capital, etc., from few family offices in the journey, and we are now very aggressively investing in our growth, because we have a very good degree of confidence while the space is crowded. Marketing tech in general is very crowded. That said, we found a very sweet niche for ourselves. We think a very compelling company can be built in our category by focusing on emerging markets and the emerging market opportunities, unlike what's been traditionally the common wisdom. Braze recently went public. That's practically the first new economy company in our category. They're again 10, 12-year old vintage company, that went public. And now at least people have a benchmark, right, in terms of what these kind of companies will look like, and not compare us with the old economy companies. So all of those are very good signs. Thanks to COVID, there's a bit of acceleration, especially in the enterprise category. And while it's very early days for me to say that we are benefiting from it, but we clearly see the signs. So all of this puts us in a very happy space right now. And all of this, the learning to that question, and the one line summary for everybody listening to this is just stay put, folks. It's nobody got it easy, and some people do, but it's hard to optimize for that. What you can do, what you can control, is to just stay alive and stay put for a long period of time. And things fall in place as long as you have a very clear understanding of the pain point you're solving, as long as you understand your market, you understand the domain and the landscape, things will fall in place, right? So it's we have been lucky and privileged that we have survived all these years. Some very good investors who have backed us through this journey, some very good customers who took leaps of faith in us when not everything was going our way. So yes, a lot of gratitude to those things, and of course the team that's been in this journey. We have had people who've been throughout from day one till date, and a lot of people who came and became a part of this journey in due course. It's it's been phenomenal. Looking back, it's not been an easy ride, but I don't going back. I won't change anything at all. We've done things the way we should have, and it makes us more battle hardened, more wiser, and just a little bit more informed about the choices that we make. going forward and today. So yeah, I'll take a pause here. I know I've spoken a lot, but I'll let you continue.
And the current revenues of the company, which are public figures, you have said that it's more than 100 crores
That's right.
uh,
That's right.
annual recurring
So
revenue.
we're doing more than $15 million of ARR. We're growing 100% year on year, and as I mentioned, because we never had the luxury of having capital, so cash flows has been always sort of a um, very key point to our existence, and we have always had our focus there, which also means that we have done these things very profitably over the last 3 4 years, and that's primarily the DNA of the company. Now we are investing a little bit in growth, but that's just a course of the journey. So yes, $15 million of ARR, more than 400 customers globally. Almost half the business is in India, the other half is in other emerging markets, Middle East, Latin America, Southeast Asia, a little bit of Europe also, and um, very good signs of adoption across the board. We've been able to find our sweet niche. We've been able to uh, position the product a little differently from what's out there, and build to our thesis for the customers that we are going after. So yeah.
And in 2015 timeframe, when you pivoted, uh, did the revenues hit zero or near to zero because of that?
Yeah, we almost got to zero. So yeah, I told you right at peak we were about $2.5 million.
Yeah.
And then when we pivoted, we lost one of our biggest customers because they didn't like us pivoting and shelving the previous product, so just churned, and that trickled a series of churn. Initially, we were a little reluctant because we wanted money to survive. But once we had some traction on the current product, we forcefully churned all the previous customers on the pivot stack. So that got to zero in about a year and a half period from the time we pivoted. And today it's all the new stack that we sell.
An easy choice at that point of time would have been, Avlesh, to keep the old product also and make the new product live, right? And upsell the new product.
Correct, correct, correct.
How did you
And
take the
and
difficult path?
sure, and said in all candidness and honesty, we did try that. We did try that because that's what as an entrepreneur that's what you want to do. You don't want to lose customers that you've acquired. But the lesson there has been said that there's a lot of talk about finding the right product fit, and a right product fit is always about is a lot about finding the right persona fit, right? Who are you building this for? And there was a huge difference, change in terms of who was the buyer earlier versus who was the buyer now. And in SaaS, anything B2B, that's very complex. To be able to sell to a buyer who is not the real beneficiary of the product. If my earlier buyer used to be more people from the customer experience teams with smaller budgets, my new buyer is always invariably the CMO with much higher budgets, right? And that changes a lot of things because these are two different buyers with two different problem statements. What appeals to this one doesn't appeal to this one because their problems are very different. Trying to make it work, finding ways from this guy to this guy, it's all very complex and very difficult. Not that it can't be done, but very hard. If you have to start from zero, you shouldn't even attempt it. We did. We had a few successes. Surely we did because we had good relationships. We could go in, but yeah, all this is invariably very very hard. And if you're starting from scratch, you shouldn't try anything of that sort. We did, but we did get a few conversions, but yeah, most cases it was just disappointment. We had to let them go. We
And
managed to sell to the same companies, but in a very new way of finding the new person, doing a new pitch, doing a new demo, doing new set of integrations, and then selling. And of course, servicing and pricing, etc. But it was an altogether new process. The access that we had initially, we couldn't make it work through that access.
it was almost selling to a new company. There was
That's correct.
nothing which could help you
That's correct.
make the process faster.
Bilkul, bilkul. We had some success in few cases, but yeah, exceptions mostly.
It was not repeatable for you, so that
No,
you
we,
couldn't.
no, no. We
And,
tried,
and
but we couldn't. Yeah.
and how did you find your price point, right? Because
Yeah.
$3,000 and $40,000 are very different, right? There's a
That's
difference
right.
of a 10x there.
True. True. Evolutionary also. Yeah, we had. I don't think we have revised much. in the last 2 3 years. Early days was a lot of discovery. So when we launched in 16, July, there was we had absolutely no idea. So a lot of it was driven by what the American companies were doing at that point of time in terms of their pricing. And mid-market enterprise SaaS, pricing is always, it's not transparent. It's not out there for you to decide. It's always very custom, depending on your volume, data, etc., etc. So there are many pieces in mid market pricing, and we discovered that during the course. Um, but over the period of time, said it became very clear to us that the only way we are going to make money on this tool is when we position it as a revenue making tool as compared to just yet another marketing tool, because there's no dearth of those, right? There are just so many of them out there, each claiming to do a great job improving your metrics and numbers, etc. So the way we discovered ours was, what was the real revenue impact we were bringing into these customers. Most of our customers are in the business of doing online commerce, online travel, education tech, fintech. There is direct. This is almost, these four categories are almost 80% of our customers, and in each of these cases, there is direct impact on revenue when you use a tool like WebEngage. A tool like WebEngage is basically, it basically helps you get more conversions on your existing user base, on your existing install base in your app, on the existing traffic that you get on your website. Right? So it helps you do that, and then it also helps you get more repeats from the same existing customers that you have, right? And these are very clearly demonstrated in the product, very clearly attributed to WebEngage. Our pricing discovery, a lot of it happened backwards when we discovered those numbers. And very happy to share with you, right, that in almost all cases, our customers, they end up making 20 to 25% of their revenue from WebEngage, right, in a more evolved state. It takes time for a customer to get there, 6 to 12 months usually, from the day they go live with WebEngage. But in a more evolved state, 20 25% of their revenue, absolutely undisputed, comes from WebEngage. And when that happens, then we are able to price it in that manner, looking at us as a small cost of revenue, as compared to just a tool that you bought. So yes, our discovery happened in that manner, over a period of time. We have a lot of mid-market customers. That's what our bread and butter is. Slowly, gradually, we are also finding inroads into larger enterprises. People like Unilevers and Adani's, etc. Right? We're finding ways into get into these kind of customers, since the last year. So our profile is going to dramatically change, in a year or so. But that's where we are currently, and the price discovery, as I said, it happened over a period of time.
When did you discover your current positioning, right? And what helped you cement it? Because right, a lot of changes, a lot of flux was happening. So
Yeah,
when you said right, I want to be this thing for all my customers, rather than being something for some other and something for some other, just to close
sure.
the deal.
Sid, this is a great learning from our journey, by the way, right? For most entrepreneurs who are usually crunched for resources, right, or who operate in crowded spaces. Anything which is a crowded space, right? The reason it is crowded, Sid, is because the TAM is very large. If there are more companies doing good, right? In India, you have two, three in our category doing okay. In Americas, you have about 10, 12, couple of Israeli companies, few in Middle East now. If there's so many companies, and doing well is always very subjective, you can always uh, you know uh, you can always ask questions about what's doing well. But overall, right, collectively, all these companies, they do close to 500 $600 million of revenue, right? And I'm talking about 10 to 15 companies, right? Top 10 to 15 companies. Now, all this space was created in the last 5 6 years, right? So there's what this tells you. This tells you that there's a very large opportunity ahead. It tells you that this space is getting created, while the jargons are all the same. But this is a new emerging area, which is not the same, or doesn't need to be compared with what the old economy marketing tech companies were, because they were doing different things. Very hard to explain. That makes the category harder, because from a 30,000 feet view, everything looks the same. All of these companies will look exactly the same. And our journey, right, if anything, is essentially a case study for founders who find themselves stuck in that position. Because you have to understand that when you are in a crowded space, you have to look different and you have to stand out. You have to be different. You have to find a niche. Otherwise, it's extremely hard for you to grow and scale, especially if you're, crunched for resources. And our journey, as I was saying, is a case study in always finding that niche. We have continued to find that niche, that customer segment, that product niche that will stay true to, instead of getting moved by what everybody else in the competition is doing. And two, always and always find out ways to go deeper into that customer instead of staying shallow. You always try to go deep, because the problem that we are solving is a deep one, right? If we end up making money for you, then there's nothing better out there, right? If you take us seriously, we make more money for you. And the product thesis at WebEngage is largely driven by this philosophy: is what more can this customer do with the data that we own for them? Can we create more value for them, right? And we took some cues from the large enterprises, right? I'm not sure if the audience would be familiar. All these large software providers, Adobe's, Salesforce, Oracle, IBM's, except for Microsoft, everybody's in play. And they have what they call as marketing clouds, very large marketing clouds, decent chunk of their revenues. Right? Adobe does close to $1 billion on their marketing cloud annually. And in the last 15-20 years, they've basically acquired a few companies that manage data, offer a data platform, companies that offer a campaign management tool, companies that offer a analytics tool, companies that offer a web personalization tool, etc. And they bundled this, went to the CIO of big pharma, big airlines, big banks, big insurance. That's their target segment. They go to these guys. It's always a CIO CMO sell, and they've sold this entire product stack. Very old economy products, nothing great or fancy about them. But there's a very thriving ecosystem of what's known as system integrators around these products, whose job is to deploy and make money out of these products. This is an entire ecosystem, very large ecosystem at that. We knew there was an opportunity because this had to be disrupted at some time. This will get disrupted. No customer wants to spend $1 million in just putting a marketing stack out there, right? Nobody wants to do that. Today they're doing it. Slowly they'll realize they don't have to. We see that as an opportunity, and we see a very we see a good sort of traction on us evolving into becoming this marketing cloud, which is DIY in nature. A very strong, phenomenal DIY substitute to what these old economy marketing clouds are offering, and go after that segment and make it so DIY that the mid-sized companies that we are catering to today, which are essentially buying different tools. They buy tools for their analytics, they buy tools for their email marketing, they put tools on their mobile app, and so on and so forth, right? We're building a very compelling one single dashboard multi-product for this category of companies, for a product which just works out of the box, right? And going all the way to enterprise, where we disrupt the large old economy marketing clouds. To us, that's the opportunity. If you zoom into what's happening in the rest of the category, what the others are doing, they're going after the mobile first and mobile only businesses, right? Each of these products, they're positioned as mobile growth stack tools. And I'm pretty sure that's a phenomenally large opportunity too, because all these names that I took in the Americas, some of the Indian companies, they're all going after that as their opportunity. Now, when everybody was going after that opportunity, we had to carve our niche out and not chase the same, right? And we decided to focus on something else, right? The more unsexy, omni-channel businesses, not the mobile only, mobile first businesses, but somebody who is doing their business across the board, multiple touch points, more complex. We decided to focus on that and build for that segment of customers. So it's a very conscious choice to build in position. But the reason I gave a longer answer to this is because there's a lesson here for people who are in crowded spaces. For companies that are in crowded spaces, don't have the resources to fight it out, you have to find your niche, because crowded spaces, they also bring very large TAMs, they also bring very large opportunities. You have to zoom in, find your niche, grow and scale, right? We ours would be a phenomenal case study, right? When we get to that point of celebrating, which is a few years down the line, it'll be a case study. It'll be a case study in that, and I'm hoping it works out the way we envision it. We are continuously learning, improvising, but staying different has been a part of the product strategy and the growth strategy.
Avlesh, you have been a founder who I would rank like number one in among Indian entrepreneurs in resilience. Uh,
Well, no, I won't take that award. There are many others, deserving others. If at all, you can give me like a consolation prize in survival. But yeah, thank you. But thank you.
no, because along with the challenges, in at professionally, right,
Yeah,
you face a lot of personal challenges during your journey, right?
that's right.
Investors doubted you from the point of view, and
Yeah,
your team doubted you, right? And for an entrepreneur, family is the bedrock of support, right?
true.
And then
Yeah,
that shakes up, right? The confidence, the clarity, everything goes away for a toss.
yeah.
How did you manage to hold yourself during that time and you know bring back the clarity and emerge even stronger?
No,
You're
you're right. You're
grew
right,
wise,
Sid.
right? During that
Yeah,
process.
you're right. Very, very difficult phase, personally for me, and for everybody around me, whether it's in the family, my team, my shareholders, investors. Very difficult times, shit. Very, very difficult times, shit. And I won't go deep into the details of what happened, what transpired, but I had I had to be strong. In all these moments of stress, the only way you're going to survive is standing your ground and being strong about what you want to be. I have never thanked my team enough, my co-founder enough, for being my pillar of support during that period. They were the only ones I could fall back on, and it took me a lot of time. Rajan, Karthik, all these guys, on the cap table, they were very, very helpful and supportive during that journey. At least had a listening ear, right, in terms of helping out what really had happened and how to course correct, what to fix. But the point being is, I'll go back to the point of staying strong. um, I'll tell you what I did said, right?
Yeah.
That 1 year period was probably very difficult. I don't even want to go back and reminisce any of that period because it took a toll on me and my health. Everybody that I met after that, potential hires, potential investors, potential customers, not like the average customer doesn't care, but large enterprises, they do care. They're having all these meetings, right, with customers are talking to my sales folks, my pre-sales folks, my sales engineering teams, etc. Investors are talking to me, my other founder, and some of my senior team members. Prospective hires, they're talking to their hiring managers. People applying to marketing, sales, etc. Right? I used to, wherever required, in most cases, in fact, back in the day, almost 100% cases, I used to go into those calls, those meetings, and I used to tell them that I know you have heard of this. I know it's on your head. I know you haven't brought this up, but here is me telling you what it is and what we have done, and here is why you don't need to worry about it. I used to go proactively do this over and over said with every single person concerned. All the women hires in my team during that period, no matter who they were, the hiring wasn't complete until I had spoken to them and clearly told them that this is what it is. This is what it actually was. This is what we did. And here is why you don't need to worry about it. We know what we're doing. It's unfortunate that all of that happened, and we were seen in certain light. I was seen in certain light, but it's not what it was. And you need to know the truth. You need to know the story. You need to know what we did as a company, what I did as an individual. I used to lay this bare for every single person that we used to interact with. Imagine how tough that is.
Yeah.
Imagine how tough that is for an individual who has to do this. So, what seemingly seems easy, we survived. Yes, we did. It wasn't easy. I had to do things to make sure that the remains of past don't affect our present and future. We continue to be very headstrong as a company. We continue to be very focused on our growth, very least distracted by everything else that's not supposed to distract you at all. And at the same time, right, build solid foundations around building a very large company, right? And none of that is easy, right? You have to. It's not just about building product and finding customers. There's so many things around that you need to sort of build. My lessons and my learnings from those have been very, very positive. While all of it took a lot of toll on me and my team, and my entire cap table, but we've come out very, very strong, knowing exactly what not to do. Right, and those are some very precious lessons learned the hard way, unfortunately. But yeah, none of it happened without me and my team sort of taking the problem head on. You cannot run away from it. That's the summary of the lesson. If unfortunately you have to go through that stressful phase, you can't run away from it. You have to take the problem head on and solve it.
And as an individual, right, you want to forget the past, but because being the situation you were in and you were a leader, right, you had to relive that, tell that story to everyone day in day out again. I can't imagine how tough it would have
It never
been.
goes away. It never goes away, Sid. Very, very unfortunate. I feel very saddened by people who got impacted because of this. Everybody around me, everybody, in the company. Otherwise, I feel bad. I feel terribly bad for everybody who got impacted because of it. I can't go back and undo. But if if me as a person have to bear the brunt of it and take the toll, to ensure that everything else is safeguarded and moving forward, I've learned to live with it. And I know this is not something that will ever go away. But it's okay. It's fine. I've learned to live with it. And mentally I've become a lot more headstrong about all of these things around business, and my own personal life, personal choices that I make. It only, what doesn't kill you makes you stronger, right? So I've lived that journey, and hopefully all of it will be put to good use as we build this and as we go along. This is lessons learned the hard way, not only for myself but for my entire team. Everybody has been privy to what we really went through, and collectively makes us a very strong, resilient team. All of these, right? Yeah.
Okay, so in your evolution as a founder, right, what are the things that helped you, right, during the past journey, and what is helping you right now, build for the future, right?
I'll tell you, Sid, and it's very funny because I'm not able to explain this very well to prospective investors also. But 10 years into this space, right? And I would want to believe that the team's pretty smart. Uh, they may not be great pedigree, but they spent these years with me on the ground, in the battlefield with the customers, fighting out with overfunded competition, fighting out with old economy companies, winning deals day night, building a product that everybody was, laughing about 5 years ago. Now everybody just has, from a hygiene perspective, everybody has the same stack, right? They all built it out. When we build journeys, everybody's like, what is this? Who needs this in the very first place? And customers demanded journeys from them, because the experience, what the experience with WebEngage. Now everybody has it, right? To me, I think it's very underrated in the startup ecosystem, the amount of knowledge that you acquire by being close to your customers, by being close to the pain point that they have, is it's phenomenally valuable insight, which of course you need to translate into product and your go to market and your sales marketing, everything else. These 10 years for us, while we have not too many things to show for, the journey has just started, hopefully will be worth something in some time. But the amount of insight that we have about customer behavior, the whole landscape in general, is unprecedented. To me, it's very valuable. How we put it to use, time will tell, right? Whether we are smart enough to put it to use, time will tell. But I would want to believe that it's a very it's a very strong structural mode to have in B2B businesses. Knowing the pain, the real pain, and where your category is headed, knowing what customers are going to do 5 years from now, it's a, as I said, it's a, to me it's a structural mode. Very hard to express, very hard to prove in this world, but I find that incredibly valuable. And me and my team, we spent years doing this, building this thesis out, right? And very battle hardened people, very battle hardened. We had absolutely nothing to fight with. We still fought the fight, right? And came however far we have come. All of that is incredibly valuable to me as a founder. I cherish it, and believe me, I it's one of my assets. I can't put it on my balance sheet. I can't show it everywhere else, but it's an asset, and will definitely build value on top of it. I'm 100% confident that we will.
Avnish, coming towards the conclusion of the podcast, I'm very interested to know, like, you can go public as a company in India right now, right? 100 crores revenue on your balance sheet is amazing for a SaaS company to have. Latent View Analytics went public at 300 crores of revenue, and it was not even
Great
purely
company,
product.
by the way. Absolutely
Great
great
company.
company, by the way. Yeah.
Great company. Took 15 years in making, and it's a
Right.
like a services company at the heart of it,
Right.
right?
Yeah.
Got valued when they were going public at 3,600 crores, which is almost 12x the revenue. And
That's right.
on the day, right when they debuted, the price went up by 2.5 to 3x,
I know.
right?
I know.
Or became a unicorn, right? So many VC jargons or VC lingos got
Yeah.
smashed, that they
Yeah.
such kind of companies can't create value. They created immense
That's right.
value,
That's right.
right? And
Enormous amount of value. Yeah.
so how do you think about WebEngage, going public? Because now you are away from the VC noise, right? The traditional VC
Right.
noise.
That's right. No, and congratulations to all the company. We have had a whole bunch of IPOs this year. I know a few are coming. Some of these are very close friends, and I'm very happy that all this has turned out so well for most Indian startups. And it's a great sign. It's a great sign that there will be there is appetite in retail investors, right, for these kind of new age companies. And it's great to see, right? 3 4 years ago this wasn't even a possibility, and I know there are naysayers even now. The world always will have naysayers, right? So it's absolutely okay. People do what they do at that point in time, and everybody learns and grows. Stories like Latent, right? Or for that matter, other B2B companies, Apple, Group Mobile, companies which have gone public in the last year or thereabouts. There is appetite for B2B stocks in Indian market. That's clearly visible now. Very small sample, a lot of it has to happen for this to, you know, to pan out in the way we want to. As far as WebEngage is concerned, Sid, we'll definitely go that path. That's very clear. But I don't think for the next few years we are even thinking about it. 100 crores, while it sounds 100 crores, it's a very small number. We think there's a very large opportunity to build 1,000 crore revenue company focusing on these emerging markets, right? And I think we can make it happen. We can make it happen. It take us a little time, and for the story to pan out. See, retention. I'll tell you that the reason why it took us longer. and we want more time is because it's a very evolving space. Everybody is learning what this is. Nobody knows what this is. Our comparisons of what this could be is all with companies that don't directly compare, and it's very nuanced, but it is what it is, and this will change in the next few years. The awareness of a retention skill, right? If I had to tell you, said it's not common wisdom. I told you, right? WebEngage makes money for its customers, right, to the tune of 20-25% in a more evolved state. That's not common wisdom for the CMO. You if you go around and talk to CMOs, it's not common wisdom. They'll continue to spend their marketing budgets on Google and Facebook. It's more proven. It just works. It's costly. Everybody knows it. But they've been doing this for donkey years. Compared to giving your mind share to something which is untested, they don't know it yet. They don't have the conviction yet. They haven't gone through the cycle yet. Will it happen? I am 100% confident, right? I bet my 10 years on this. I'll bet my entire life on this, right? I know it will happen. It just needs time. Right? So for what we're doing is, it's not related to what WebEngage is, or it could be. It's also related to the market's maturity of growing to a point when they actually start investing in these tools. That's when the kaboom happens, right? We're waiting for that moment. It's not very far. It's not around the corner, but it's not very far either. And it's a few years of education, investing in growth, investing in markets, investing in skill building, etc. And companies like us, we're doing fair bit of our share, right, with whatever little resources we have. We're trying. Others are trying too. We're all collectively educating the market that this is where you need to invest. Everything that has happened in the you must have heard about data tracking, privacy, Google taking back some of their products, Facebook launching some of the other variants of what they could. Third party targeting, tracking, marketing is going to suffer setbacks more and more. Each country is coming up with its own data policy regulations. They'll make it more and more complex. Of course, Google and Facebook will find ways to survive, and they'll do more, but that creates opportunities for companies like us. Everything about your users is with you. You don't have to necessarily go back to an ad exchange to get your user back. You forgot the fact that they were your users in the very first place.
Yeah.
Right? If somebody is best placed to get them back is you. It's not Google or Facebook. Right? So first party CRM marketing will become more commonplace. It's more complex in a B2C setup. Companies have very complex touch points. You build an app, you have hybrid apps. A lot of your audience comes on your mobile side. Then you have your desktop sites. Somebody like a lending cart operates call centers also, and back-end offices also, right, to engage with customers. All of this basically makes the customer journey very complex for a B2C company. And tools like us, we're actually solving for it. They're very complex. The CMOs will warm up. They have started to in the last 2-3 years. It'll become mainstream in another 2-3, and that's when the real explosion of opportunity happens for companies like us. And we're waiting for that time. We are doing our bit in the meanwhile. The IPO route surely very visible, very clear. We'll definitely go down that path. I'm pretty confident. Our investor group also feels very confident, but we also are cognizant that we're just way too small to even think about it. The next 2-3 years, heads down. We'll continue to invest in growth and education.
Thank you so much, Avlesh. I can't tell how much valuable this conversation is. It's a masterclass in resilience and company building.
I'm glad you find this useful. I'm hoping others will find too. But it's been pleasure, say, talking to you.
Thank you, Avlesh.